Hello, everyone. Welcome to the TBR webinar series. Today, Practice Manager Allan Krans and Senior Analyst Evan Woollacott will be presenting the webinar, How Ecosystems Turn Cloud Technology into Solutions. Before we get started, just a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, the speaker bios, a survey, information on the next webinar in our series, including a registration link, an exclusive free trial offer for folks on the webinar who are new to TBR, and a related content widget where you can download the slide deck and access other related materials. These buttons on the bottom of the screen allow you to minimize each window to customize your webinar viewing experience. You can also maximize the slides if you wish to view them in full screen. After the webinar, you'll receive an email with a replay link, as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Allan to begin the webinar.
Great. Thanks, Haley. Thanks, everybody, for joining Evan and I today as we take you through really what we're seeing in terms of how the role that ecosystems are playing in the cloud markets that we cover, and also from the customer side, how it's really an essential component of taking the technology that's available from the cloud providers and turning that into solutions that actually deliver results within their organizations and justify their continued investment in new and expanded cloud solutions. So there's a couple components of today's presentation that Evan and I will go through with you. First, kind of looks at the high-level picture of where the market is at in terms of cloud, the role that ecosystems have played so far, and how we think that's a different story going forward, and that they'll be much more important for actually realizing the growth that we forecasted in the public cloud space going through the next couple of years. Secondly, we'll take a look at that customer perspective and get into really what the solutions are that they're looking for, the ways that they're able to realize those, and all focused on how the ecosystem and partners beyond just the largest cloud providers are helping them to implement things that actually deliver results. And then lastly, Evan will go through on the professional services side, obviously a very critical partner category, and look at how they're pivoting a bit to take on a little bit of an ISV role in today's ecosystem and bring some of their own IP to the table with customer engagements. So with that, let's get right into the overall cloud market and kind of how the ecosystem overlays on what we've seen and expect through 2025. And so when we think about the origins of cloud, so this graph starts in 2010, so it's even goes back a little bit further than that. But largely this first phase of growth, the first 10 years roughly, was largely driven by a direct sales approach for the vendors that had the most success over that time period. A couple things drove that. First, the market overall was really designed to cannibalize and to eliminate some of the aspects that partners previously provided in traditional IT solutions. So from an awareness perspective, very easy cataloging of solutions, very prominent kind of web-based awareness for a lot of the early stages of the sales process. So that obviously takes some of the promotion, marketing activity, feet on the street type things that partners were really great at within existing accounts and cannibalize it. And then obviously through the implementation and support phases of those solutions, a lot of the automation and providing directly from the cloud vendor all the elements of the service that are needed to make it work, at least as a technology, were part of the whole cloud model. So there was some cannibalization, but I think the other thing to really think about is the changes in society overall and the role of the web in terms of research and product awareness. Again, a lot of that is a broader shift that cloud kind of tied into in some ways. But again, just had an impact on AWS, Salesforce, the two leaders in terms of the size and growth through the early stages of cloud. On purpose, really started with a go-to-market model that allowed them to grow directly. And so that kind of drove a lot of the, at least in terms of the winners, the way that they were able to grow and establish their positions in the market. Now, so we're saying things started to shift really in 2017. So we've had a couple years of kind of percolating shifts in terms of the role of partner programs. Yeah, there were programs before, but this is really where we start to see it impact the market. And so a couple things drove that. One, on the customer side, we'll go through the type of solutions and workloads that they're looking to implement changed. It wasn't just the lowest risk assets that they're looking to utilize cloud for. They're looking for more mission critical systems that really support core operations, finance, sensitive data. All those things are much different for customers in terms of how they want to utilize the technology and also combine it with a growing landscape. You can see, in 2017 through 2021, significant growth in terms of the market size. So you had a lot of customers that maybe had 5% of their environment cloud-based prior to that. All of a sudden, when you get up to doubling and tripling that figure, a lot of systems are interacting, and the complexity just drives a lot more need for outside services and solutions that are customized in some ways to their organization and their environment, and that's very difficult for the cloud vendors themselves are not catering to that aspect of the market. They're leaving it for partners, and so that's part of what's really driven an uptick in terms of the ecosystem activity that we've seen. Now, the last thing, as we kind of look to the right and think about the drivers of growth, it's tough to ignore the impact of the pandemic and the effects of COVID-19 on the business environment and the pace of change that was required for businesses of all different types and industries. Cloud played a critical role in that. And so we actually updated our forecast here to account for both the immediate increase. You saw increased rates of growth through last year and this year, and also the change that's having on future expectations. Accelerated paces of growth in cloud investment because of some of the things that organizations have gone through over the last 18 months. And so whenever you see, that kind of inflection point, again, it's tough for organizations to work through that solely on their own, just working directly with the cloud providers. There's simply not enough resource available to allow them to work through that and to actually realize some of their increased pace of growth that they want to achieve with IT and cloud in particular. So again, another reason why they're looking externally into the ecosystem for solutions either through ISVs or services or managed services that help them realize that. So within ecosystems, obviously this is not the first ecosystem. There's legacy ecosystems that have been around for quite some time for the traditional IT world. And so one of the important things that we wanted to look at was the type of activities, both that customers need as well as that vendors are trying to promote in terms of their investments on the program side to encourage partners to come in and participate. And so, this is kind of a back of the napkin type ranking. But when you look at the different types, I think that the overall theme that we wanted to highlight is in the traditional world with on-premise delivery, a lot of moving parts in terms of supply chains and implementation and testing, all those things were very important in the traditional environment, still are. However, they're less important in the cloud ecosystem given the dynamics of the delivery model. A lot of the back-end integration and infrastructure is taken care of. It's less about driving sales awareness out, more about developing solutions and partner properties that draw people in. And so as a result, there's kind of a changing of priority in terms of what's important, both for customers when they're looking for the impact of ecosystems on their choices, as well as vendors in terms of, again, prioritizing their limited investments in partner programs to get the best outcome both for their business as well as for their customers. And so overall, the shift is more towards partners. So ISVs, managed service providers, stand out at the top. That's all about creating value for end customers that enhances the value from the cloud technologies. So, for instance, with ISV solutions, there's a lot of different benefits to the cloud vendors as part of that. There's a lot of stickiness when they're able to not only have a customer sign on for the core platform, but each additional partner module that adds that customization, that turns it more into a solution that fits their vertical or unique use cases, that enhances the financial model for the core cloud provider. So they really want to nurture and support that and give partners an opportunity to grow within the ecosystem and drive their own business as part of that. All right, so let's take a look at from the customer perspective. So folks that are actually investing and using these solutions, what's going on? So there's a couple factors that we called out that we think are driving the importance of ecosystems and helping customers get, realize their expectations and goals for the cloud investments that they're making. So I put the least important one at the bottom in terms of that customization. The accelerated adoption is really kind of the umbrella that is driving demand for customers of all types. So the flexibility of cloud, in some ways the financial benefits, the availability with supply chain constraints, all those things have really changed the way and the amount that customers are willing to invest in cloud solutions. However, that doesn't necessarily mean that partners need to be part of the equation. Part of it is just increased consumption, direct to vendor. However, it is creating some level of complexity that, again, drives need for customization, integration, things that the cloud vendor themselves is not able to accommodate and cater to. So looking at some of the things that are kind of unique and drive partner demand and requirements, first is customization. So this stack comes from our most recent customer study, where if you look at for some of the applications that are being implemented, 63% need some level of customization. Especially for some of the early cloud solutions, that may seem like a interesting or questionable statistic, given that for a lot of customers, cloud is about standardization, eliminating things that are customized and need to be updated and maintained. That was all part of kind of the early value proposition. However, getting into some of those application workloads, they need to be adopted based on the unique circumstance, and so a majority are doing that. And again, that's a prime role for a partner to come in and help design, select, implement, manage those customizations so that they can get the value out of the cloud technology and fit it to their unique situation. And then secondly, hybrid I don't think can be understated in terms of both how ubiquitous it is for most customers, whether they, for large customers, whether they want to be in a single cloud environment or if they're open to having a multi-vendor environment. There's really, you don't find a lot of customers that can actually drive to a single platform or application provider. The needs are just too nuanced, and a lot of times the realities of business across geographies as well as M&A activity bring in different technology platforms that need to be maintained, and so they end up operating in this very complex hybrid environment, as well as there's very few customers that are going to be entirely cloud. When we look at the feedback as organizations get deeper into their migration paths, the realization that there are going to be things that can't move, shouldn't move, aren't financially logical to move, all those things pop up, and so you have a majority that may end up being cloud, but a solid 20 to 30% of the environment that's going to persist in the existing delivery mode for the foreseeable future. And so in that world, what started as a path to simplicity has become a lot of the same complexities of IT have crept in, and so that's where solutions that are specialized from ISVs, services from SIs, or even MSPs are really valuable to manage that complexity, especially in the skill environment that we have today with labor shortages. That's felt across the board, and so being able to capitalize on IP from third parties is really perceived as valuable for a lot of customers, and driving some of that demand for partner services and ecosystems that can support them, and translating into things that are workable for them, maintainable, and they feel comfortable with moving forward with some of these investments. Okay, so with that, I'll hand it over to Evan to take us through some of what's going on in terms of professional services partners as part of this ecosystem trend.
Thanks, Alan. So to kind of set up the story around professional services, it's important to speak through, the opportunity that these cloud providers have to leverage these ecosystem partners to strengthen their go-to-market efforts, particularly for some of these industry-led portfolios that we're all seeing being launched across the board, but also how it provides an opportunity to kind of strengthen their acquisition-led growth efforts. To capture this opportunity, though, the cloud vendors really need to reconsider how they're designing these programs, as the architectures which worked for the legacy software days don't align well to the realities of a cloud world. The cloud obviously has kind of accelerated the rate of innovation within these portfolios, be it with the internal R&D efforts, but also the litany of tuck-in acquisitions that have played out over the past few years, and then quickly provide them to their install base. That pace of innovation, though, creates challenges for the ISV partners in particular, as they must stay well-versed, so to speak, in the partner portfolios to understand the changes and how their alignment of those changes impacts their own IP that they're working in unison with that existing solution. Often, though, the ISV partners are kind of forced to work retroactively as opposed to proactively to roadmap their IP alongside the partner, because there's really not clear clarity between the two. More recently, we've seen cloud-born players like Salesforce who have recognized this challenge, and they offer a fairly robust suite of design and development services to their AppExchange partners, which include things like solution road mapping to work with the partner early on to kind of understand how their solutions or their IP fit within the broader, Salesforce catalog of applications. This approach is critical because it allows the partners and the cloud vendors to both ensure that they're adding complementary value to the joint solutions and not overlapping value. In discussions with the ISV partners, it has also been elevated to TBR that some of the legacy providers don't always address this, especially in the context of the more nascent industry-led suites being brought to market. So the partners see the value in tying on to cloud for manufacturing, but the catalogs are still in their infancy, and the partners need greater education to understand where they're going to go, what solutions are going to be offered, and how their own IP can kind of work in context with it. So while those SaaS-led innovations are creating challenges pertaining to IP overlap, they also create issues around the licensing for the partners as well. Do the partners need to obtain an additional license to use XGizmo? Is it part of the existing package or program that they're currently aligned to, or do they need a new one? Further, if you think about how these ecosystems, you're seeing more partner and partner collaboration inside the programs. There's issues on understanding, okay, do I have to pay, does partner A have to pay for the license, to Microsoft or to AWS, and does partner B also have to pay for that same license to deliver the same solution to that client? Outside of those SaaS-led challenges, too, if you consider all the platform-led innovations and how those are kind of finding their way into these programs, it becomes much more challenging. If you're using data integration or management, NLP, AI, and ML, those capabilities are often being layered inside the partner's IP, and so now there's additional licenses they have to consider, and they have to consider how that impacts the cost to the client so they can understand how to forecast their opportunity and their margins based off those joint sales. In conversations with the enterprise customers outside of these partner-led efforts, the issues around pricing and bundling have already been elevated to TBR. As you add, say, AI or NLP capabilities to a core suite, what's that mean to the total cost of ownership to the enterprise customer? Now, if you consider that issue in the context of a partner also trying to work with these solutions, you can see where it can easily become a snowball effect. The partner is going to have to work through a litany of solution options, features, capabilities to understand what it means to what they're trying to design and develop to deliver to that customer. So these challenges kind of all come together and given rise to some new program licensing models, which have received positive feedback from some of the ISVs we've spoken with, because it just reduces and simplifies the approach. So one of those would be percent of net revenue models, which Salesforce employs, where basically, they're taking 20% or 25%, depending on how much revenue that customer generates, and that's the partner, gets 20 to 25, and then the rest goes to Salesforce. And so it's a much simpler model, and it kind of encourages that partner to grow with them by offering the tiers and the discounts on the margin as they scale their revenue opportunity together. And so to kind of incentivize the partners to come to them, we think that those approaches are going to be required because it kind of reduces a lot of that portfolio confusion, the licensing confusion, and it brings them into the fold and allows them to go to market more seamlessly together. And so if they can reduce those challenges and encourage that buy-in, they then have a strong opportunity, the cloud vendors, to kind of expand the capacity of their indirect sales organizations to strengthen those go-to-market efforts. If you consider just the ongoing labor market shortages, as cloud vendors, SIs, and consultancies all hire STEM talent, you can easily see a way where these ecosystems can be an alternative avenue for these players to get to market quickly without hiring additional resources, training them, upskilling them, and ensuring that they have the expertise to do the sale. And if you consider this approach now, too, in the context of the industry-led portfolios, the majority of enterprise cloud deployments, which the horizontal deployments of cloud, basic CRM, the low-risk solutions that Allan was kind of speaking to earlier are much more mature, and what we're seeing is the enterprise customer pivot to have much more nuanced solutions and expectations of what they're trying to do with their technology. So simply put, as the enterprise deployment pattern shifts from horizontal to more vertically specific outcomes, vendors and partners alike will be required to articulate the value of technology in the context of a client's actual business processes. And so while cloud vendors like Microsoft and Salesforce have raced to expand their services and consulting teams to support that, they simply just don't have the scale nor the industry-based expertise to do it on their own. And so the ISV, as ISV partners gravitate towards these ecosystems in areas like healthcare, financial services, or industrial manufacturing, they're going to bring with them a vast base of industry expertise and the ability to articulate how the solutions aligns to the client's actual needs, pain points, or desired outcomes in their industry. And so by giving more control, so to speak, to ISVs in these sales engagements or bringing them in earlier on in the sales engagement, it will evolve these players from bolt-on IP to go-to-market catalysts. So then the cloud vendors will be able to see who their top partners are that are driving their IP further, be it in industry or if it's a capability that has a horizontal appeal to it. So partner-led metrics like customer retention, revenue growth, or it's just simply client feedback and sentiment allow for the tiering of these programs, which usually then provide the partners with additional resources as they move up the tier, such as funding for joint marketing, which then helps strengthen the partner relationship and kind of incentivize them to grow together. With this approach too, cloud vendors will then be able to curate acquisition candidates across their partner ecosystems, be it in the industry verticals or in a capability area, to kind of accelerate their own organic growth efforts. And because they have that existing relationship through their ecosystem, they'll be able to go to market more quickly because that partner's already working across their core IP to, and so you don't have to do as much as the front end R&D efforts to really integrate them into the fold. To kind of speak to this, how to use ecosystems as an acquisition target, we have a case study on Salesforce. But before jumping to that, I'll open it to Allan to see if he has anything to add.
Yeah, I think one of the common themes across everything that Evan just went through is with a blending of the sales, or sorry, the partner models. Previously there's very distinct activities, whether it's services, consulting, resale, distributor, that defined partner programs. A lot of what Evan just went through is a blending. So you're going to have partners that both have their own unique IP, maybe license some of it, but also do services. And so a lot of the partner programs are accommodating that, but the traditional ones are just, more rigid than how the market is actually behaving today. And I think you'll continue to see more blended partner types across these types of activities going forward, driven by both the business models that partners are trying to employ, the way that they make money as part of their business, as well as what customers are looking for in terms of services and who they want to work with for a lot of these engagements and activities. Back to you, Evan.
Thanks, Allan. So thinking about, it's a case study really. How did Salesforce use AppExchange to identify acquisition candidates and accelerate their own internal growth? So over the past year and a half, Salesforce has looked to AppExchange partners as a way to spearhead its industry portfolio expansion and go-to-market efforts. Starting in February of 2020, they announced the acquisition of Velocity for $1.3 billion, and that was an existing AppExchange partner that had built 6 industry CRMs based off of Salesforce core CRM offering. One of these vertical CRMs was for public sector and government agencies. Then, after they closed the acquisition of Velocity in June of 2020, they immediately then launched Salesforce Industries, which was to be led by the Velocity CEO, David Schmeier. That business unit was really aimed at bringing cohesion internally, so how do you align my service and sales teams around these industries, while also providing a way to kind of pull in ecosystem partners against it. So the division launched initially comprised of the 6 vertical offerings that came in with Velocity. From there, Salesforce expanded industries to cover 12 in September of 2020, adding coverage for sectors like media, which as of 2Q21, they've already begun launching some of those industry-based solutions. One was for advertising and spend management targeted directly at that opportunity. Then in December 2020, Salesforce added services depth around industries, acquiring Acumen Solutions, which brought aboard roughly 650 employees. And the company's client base covered areas like manufacturing, financial services, but its primary focus was the U.S. public sector. So now, armed with a deeper bench of services experts, a more rich industry suite in the acquired install bases, Salesforce cited strong performance for its industry segments on the latest 2Q21 earnings. So industry cloud annual recurring revenue was up 58% year to year, and the public sector was responsible for 4 of the 10 largest deals during the quarter. And more importantly, though, Salesforce reported its largest ever new annual recurring revenue win in the public sector. Lastly, indicative of the commitment to services, this professional services business rose 37% year to year, while the group's headcount rose 31% in the same time period, based off TBR's estimates. So while they've done things outside of just acquiring, portfolio updates such as work.com for vaccine management or track and trace offerings, those really allowed them to kind of build those state and local government, contacts. And then if you consider, that in just over the last year, they were able to use AppExchange to ID these premium acquisition candidates in both software and services, and then announced their largest ever client win in the public sector, which was historically has not been a core focus for the company. Shifting gears now, I want to spend some time discussing the emerging opportunity for the GSI and consultancy firms as a result of the cloud vendors' desired outcomes pertaining to their ISV ecosystems. Over the last couple of years, the professional services entities have launched numerous partner-branded business units as they vie for share of that cloud migration, implementation, and managed services opportunity. Of the India-centric firms alone, Cognizant and Wipro each launched units for Google, AWS, and Microsoft through 2020, and then incumbents such as Accenture have been expanding their certified bench of experts against those same platforms as well. Given there's no shortage of SIs for enterprises to work with, competition for these basic implementation engagements has kind of intensified, particularly if you consider how these India-centrics are pushing in and using automation to compete at cost. So the SIs are now trying to figure out a way to enhance their value to both the clients and the cloud partners to ensure that they're going to get vie for some of those contracts despite the cost challenges. And so if you think of how the cloud vendors are evolving their strategies pertaining to ISV programs, there's going to be a strong opportunity for these same SIs to expand upon their existing services-based relationships and embrace some of those ISV outcomes that they're looking for. The quote to the right, in particular, does a good job of summing that emerging dynamic. It's, given that all of the GSIs largely work with all of the platforms, it's no longer about who can be the biggest partner covering the most sectors or geographies, but who can be the most strategic. So how can GSIs and consultancies be a more strategic partner to a cloud vendor? If you take into consideration much of what we talked about earlier, we know a key value which ISVs bring to vendors is that by filling portfolio gaps and augmenting core applications with bolt-on IP, vendor suites become more sticky in the enterprise. We know that cloud vendors are verticalizing their portfolios and will face challenges in articulating these technology-based outcomes in the context of industry-defined operations. And we know that to bring to market a complete solution, many partners may be required across the technology value chain. So it's no longer just a software provider working as a partner. The software provider might have to work with a semiconductor who has to work with a machine OEM. So all these trends align to the strengths of the GSIs and the consultancies. First, they're experts on the client's operations and processes, with each specializing in specific industry sectors, be it industrial, healthcare, or financial services, where these cloud vendors are really aiming to bring their IP deeper. In short, they have the hands-on knowledge of the client's operations to be translated into that solution design. Further, professional services vendors have been showing increasing appetite, so to speak, in establishing software or cloud solution portfolios, but they lack the technology background to bring to market a complete offering. A challenge which can be easily overcome by working with top leading cloud platforms such as Microsoft Azure. PwC's Connected Solutions business is actually a great example of this, where basically they take their proprietary IP, build it atop Azure to target some of these IoT use cases in the industrial manufacturing sector. And so as the GSIs identify these top solutions or services they're building across the industries, now they have the opportunity to bring together a branded portfolio of software, build a catalog to go then sell to other clients of similar operational constructs who have similar needs, challenges, or pain points they're looking to address. Lastly, these services entities have the existing relationships across that ecosystem value chain, placing them in a strong position to be the enabler of the ecosystem to design and deploy end-to-end solutions comprised of multiple partners or solutions or, hardware, if you consider the challenges associated with industrial where there's, OT entities coming into the landscape as well to really enable that multi-enterprise business network. So in summary, there's a growing opportunity for these firms to go beyond those traditional partner constructs and evolve those relationships around services into these more ISV specific outcomes. With that, I'll turn it to Allan if he has anything else to add before we jump on to the Q&A.
Great. Yeah, no, I think it's a good opportunity to wrap up. And when I think about everything that we've gone through today, I think the important part about the role that ecosystems play is that it's not being, forced by vendors onto the market. We saw that early with some of Microsoft's strategy, for instance, really in the early days of it, 2008, 2009, trying to push the market to a partner model because that's the model that they had, that's the distribution channel that they had traditionally. And you see that in a lot of ways for vendor, partner, and channel strategies historically. SAP, Oracle, a lot of vendors, are looking at channels historically as a way to drive their growth in a scalable way, and it's very focused on the outcomes that they're going to realize. What we're seeing with the market right now is that there's a genuine need from the customer side for these ecosystem delivered solutions, and vendors perhaps a little bit more aggressively than the customers that sometimes are trying to align their investments and programs to cater to that. So I really do think it's a point in the market where there's a fit on both sides and there's mutual benefit for across the cloud vendors with the growth that they're able to realize, the partners, the business, the real business opportunity that they have with delivering value and innovating and being able to monetize that. And then customers, again, being able to manage across increasingly large cloud environments and get things that are customized to their industry, their workflows, and work with a partner that they really trust to deliver those solutions. So across all three parties, I think it really does fit, and it's not just to the advantage of one of those participants. So with that, we will open it up for questions. We have a couple that have been submitted, but feel free to add in additional things that you're interested in through the chat, and we will go through those now. The first one is around what's the role of marketplace in these ecosystems? Is it a driver of sales, or what value does it provide to participants in the market? So Evan can probably jump in as well, but when we look at marketplaces, there's a couple that stand out in terms of cataloging partner solutions and providing a vehicle for customers to browse and transact. The first one is Salesforce, from the application side, early, large, really an ecosystem in and of itself. And then AWS has also developed quite a presence with their marketplace. And the role I think is changing, where early on, especially for kind of the platform-based marketplace that AWS provides, and Microsoft and Google have their own offerings there as well. It really was more kind of a browsing marketing site. But we've been talking with a number of ISVs that are seeing real value in transactions occurring through those. So I think it is changing to be more valuable for partners, something where, again, as customers shift more of their environment to cloud, they're increasingly comfortable with transacting through those marketplaces. And so it is becoming, a financial driver for these ecosystems as well, more so than it has in the past.
Yeah, I would just add to that I think they're obviously important to the sales for these ecosystem providers. I mean, I think the best one to look at is how Salesforce uses AppExchange. They have the ISV partner model, and they also have the OEM partner model. And so the ISV partner model is really, if you're an ISV, I think it's ISV Force what it's called. That's how you engage with Salesforce. You have access to their entire existing install base. And so what Salesforce has done to kind of create that flow or create that communication between the clients and the partners is they've added things like AppExchange chat, where it's directly on the AppExchange listing. Now the customer can reach out to whatever partner it is and ask what does this solution do for me. So if you consider that as these solutions get more and more specific in what they're doing, or if it's an industry specific offering in financial services and they have a question that partner is going to have to address very specifically, now they can rely on that partner to kind of handle that conversation for them. And kind of bringing more clarity to what the tangible benefits are for them. And that also obviously is of interest to the partners, because now they can own some of that customer relationship as opposed to just relying on Salesforce to bring them into a net new engagement.
Great. Next question is for software vendors that share roadmaps with partners. Are there certain partners that receive this benefit more in terms of partner types and roles? Again, I can start, and then Evan, you can join. So in terms of the road mapping, I think that we had a category of technology partners on one of the prior slides. So this gets above some of just the programmatic engagement. Think of AWS and VMware, their partnership. It's really critical for that type of dual branded solutioning and positioning to the market, where you really don't want a whole lot of surprises on either side for where the roadmap is going and the longevity of that type of engagement. Aside from that, we haven't seen a tremendous, I think that's still an area of friction, regardless of partner type, that there's not always great visibility, primarily from the vendor to the partner, in terms of where they're going, where there may be competition in the future. And we continue to see encroachment over time into some of that ecosystem opportunity as roadmaps and plans change for the major cloud vendors.
Yeah, just to kind of add to that, I think for the SIs building these ISV capabilities, platforms and providing road mapping to them, I think it's less valuable, to those SIs, because a lot of what they're doing is going to be, custom one-off, solution development for a client asking them to do X for them. Versus if you consider, a traditional ISV who maybe 80% of their business is tied to Microsoft Dynamics. If they don't understand where Dynamics is going or what the plans are for, the CRM offering that they're bolted onto, that creates a lot of fear, uncertainty, and doubt for them, because they need to make sure that their roadmap's going to align with what might be happening from the, Microsoft down to them. They just don't have the flexibility, so to speak, that those SI alternatives do.
Great. Let's see. Last question for now. Looking for insight on partners, SIs, getting deeper into support and customer success offerings. Support can be bundled into managed services, but looking to see how the maintenance dynamic is also changing. So with this one, I think obviously partner role has an impact. When we've been looking at a lot of the ISV relationships and OEM type go-to-market and bundling of core solutions, the partner takes on maintenance responsibilities as part of that. In a lot of ecosystems, we're actually hearing demand or that they would like to be able to sell and provide certain tiers of support for vendor cloud offerings. They see that as, that they're ready to add that to their business model in terms of activities that they can monetize with that customer relationship. But I think from a programmatic standpoint, there's still more maturity to go through in terms of how that can be delivered and managed and with the end customer in mind. So I don't think there's a lot of great examples of how to get partners engaged in providing support and selling support just yet. But we know there's a lot of interest and activity or strategy percolating for some of the major cloud providers in terms of how to leverage partners as part of that ongoing model, because again, it's an area where the business model is shifted. It's not just about partner making the sale, it's about the long-term relationship and growing the account over time. We saw AWS just recently roll out some new incentives for partners to grow within existing accounts, and part of that is being tied into how things are going, working through problems if needed, but also looking at additional areas of opportunity, and customer success is a great role to do that and provide less on the hard selling tactics, more on the partnership, understanding the customer, and finding ways that, again, there can be mutual benefit for new solutions and different solutions as part of that relationship. So more to come there, I'm sure, in terms of the support delivered through ecosystems. Okay, that's the last question. So Haley, you want to take us through the closing?
Yeah. All right, everybody. Please feel free to reach out to the team with any follow-up questions. If you have a few moments, it would be greatly appreciated if you could please fill out the survey that's going to pop up on your screens when the webcast ends. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. And be sure to join us on Wednesday, October 27th for Innovation and Transformation Center's Q4 Insights from TBR's IT Services team. Thank you all for joining us, and have a great rest of your day.